Should you sell in May and walk away? Let's find out. The month of April has closed and there's a theme going around. A lot of people seem to think that we're about to see a big crash on Bitcoin. And obviously no one wants that. But how much truth is there to the fact that you really should sell in May? Well, historically, let's go look at the Mays. The previous May was pretty terrible over here. 2022 May, we went down about 40%. So if you sold in May then, you would have done pretty well. Then 2021, we actually went down 49%. So yeah, wouldn't have been the worst time to sell either. Of course, price went back up a bit afterwards, but yeah, the lows were 37%-ish, 50%-ish. Here, price went up a max of 16%, finished about 10% higher than when it started. This was 2020. And then May 2019, we saw price go up 62%, so huge bump, max of 72%. And lastly, we'll take a look at May 2018, where price went down a total of about 19%, a low of about 25%. Okay, so does this mean we need to sell in May? Because most of the candles were pretty red and the red ones were pretty brutal. Absolutely not. The sample size of data is way too small to make any sort of meaningful conclusion off of. There is absolutely nothing suggesting that selling in May, purely based on the fact that the month of May is a quote-unquote bad one, is a wise decision. It's funny to meme about it, but I would absolutely not be making trading decisions based off of this. Now, what will I be making trading decisions based off of? Firstly, key resistance of 30K. I want to see what happens here. April was a low volatility month, and if we zoom into the weekly, just to get a breakdown of a month, the entire story of April was really one big attempt at hitting 30K, a harsh rejection, a support formed in the low 27Ks, and that's about it. Nothing else meaningful really happened in April. So just cleaning this up, we can mark out the open and close for April just to get an idea of what's happening with price. Zoom into the weekly, remark out our key resistance at 30K over here. Also, mark out our key support over here. We'll call it 27K for now, but we'll zoom in on the daily time frame. And we're also looking at the 25K level over here, which is going to be the key structural level that you can see from here. Strong data point there, strong data point there. This was the big trend shift that we speak about a lot. To the upside, if we zoom out, you can see these two data points here supporting this 30K level and a bit of resistance over here. The next key level after that is around the 36K level with these data points here. This area here where we got below and struggled to get above it as resistance. So yeah, also going to soften this level here, maybe make it a dotted line just to show you guys that my key levels I'm watching will be 25K and 30K, and this 27K is a bit of a softer midpoint level that doesn't have a key structural shift. See, price can do a few things. If price comes above this 30K level, we're re-entering hyper bullish conditions and looking to make a move back up to 36K levels. I don't see too much resistance in between this and 36K. Obviously, you can zoom into the daily here, spot some resistance at 32K, but what's more likely to happen is that'll just be short-term resistance before we do continue back up. Then if we do get below this level, it's not going to be as solid a play as the breakdown here because we don't see a big market structure shift. I'll be taking on a little bit less risk because I don't think the macro conditions would line up with the short play over here. But still, price is going back down to about 25K. Next, we can move on to the 1 day. And you can see we've marked out our monthly levels here. There's actually a lot of trading systems you can base off of trading these two levels. Personally, I don't use them as much, but I know a lot of traders use them religiously. It's really easy to get a consistent data set off of these two levels and build trading systems around them. I'll pay attention to them. They help me form my bias. They'll help me know key levels where the price may form some reactions. But what I've personally often found is that you don't need to mark out the monthly levels to see these, because even without knowing when the monthly open or close happened, you can clearly see a key support level over here. So many data points showing the price reject off of it, and then when it did finally get above this level, we saw a big breakout. Similarly, price goes up here, hits resistance at 30K, psychological, comes back down, and we saw a form of support over here with price pushing back up. So with day trading levels, there's absolutely an argument to go for the short play over here. But again, These are not my best setups. These are not my most tested setups. So what I focus on is I get rid of that and I'll be sitting out. I'll let the monthly open volatility happen. And then if price gets near this level or this level over here, that's 30K or 27K, that's when I'll be looking to take my trades. So what do we have? Let's zoom back out to the monthly. On the monthly, we're seeing the first signs of a potential reversal over here. The trend is still obviously in a bear market, but we've broken our first key structural level. And if price comes back and sets itself a nice higher low, we will have confirmation of a nice reversal as it goes back up. That's why I've stated before, a retest back down to say 25K over here, and then that holding will set us up with a really nice market structure to see a reversal go up to this 36K level there. That would be some really clean, healthy price action. Now move to the daily, bring in the moving averages, and we can see confirmation of the clear uptrend, and then you see the crisscrossing happening over here, which shows some weakness. Now, one thing I absolutely love to look out for is this 100 moving average, and I'll share a trick with you guys right now. If we see price starting to crash sharply towards this 27.2K level right now, I've spoken a few times about why I'm avoiding buys there right now. I'm not looking to catch these bounce plays, and that's actually because there isn't enough confluence for me, and it's not my best setup. However, one thing can definitely change that. If we continue to see sideways action happen over here, and this average here continues to come up and syncs up, this is the 100-day moving average, and then we suddenly get a new confluence point of the 100-day moving average synced up with the 27K, and then price breaks down to this level, that is a really nice opportunity to buy with a clear invalidation, and then if the invalidation gets hit, immediately switch bias and start playing to the short side. Because the thing is, if I did buy here and sold resistance, so just buy the support, sell this resistance, or sell this resistance, sure, I would have made money. But that's not the point. I'm not trying to make money on one trade. I'm trying to make money on the next 100 trades. And therefore, I need a large sample size of data to confirm any decision I make. And finally, we move over to the 4-hour. So we've got the monthly structure, still macro bear market. We've got a high time frame bias. That's the daily telling us it is bullish, but with slight signs of weakening. And then we've got the 4-hour, which gives us a ranging sideways market, clear as day. You can see crisscrossing of the moving averages, all going side to side, a clear range that the price is bouncing between. These are the conditions we're in right now. And the break of the range is this level here, because why? Look, we're now making our way down to make the next lower low. That's why I like this play here. I prefer trending conditions, not the ranging ones, the trending ones. If you notice, all my trades are when I see that trend start to break. This should help give you guys a good plan for the coming month. I would pay no attention to the sell in May memes and just focus on your plan and your trading. Good luck.